Hello friends, in the previous video we have completed the theory of fluctuating income bearing securities. So now it's time for starting with the sums of practice manual. Let's start with the sum of fluctuating income bearing securities. Question number 2. On 1st April 2009, XY Limited has 15,000 equity shares of AB Limited at a book value of rupees 15 per shares, face value rupees 10 per shares. Okay, this is the opening stock detail. Opening balance detail. That means on 1st June 2009, XY Limited acquire means purchase 5,000 equity shares of ABC Limited for rupees 1 lakh. ABC Limited, wait, I'll zoom it little bit. ABC Limited announced a bonus and rights shares. Bonus was declared at the rate of 1 equity shares for every 5 shares held on 1st July 2009. That means on 1st July, bonus shares were issued at the rate of 5:1. That means for every 5 equity shares that you are holding, on that 1 equity shares will be given as a bonus of free of cost. Okay. Right shares are to be issued to the existing shareholders on 1st September 2009. So on 1st September 2009, right shares are issued. Okay. To the existing shareholders, the company will issue 1 right share for every 6 shares at a premium of 20%. Okay. No dividend was payable on this shares. On this shares means bonus shares as well as right shares. As it is given in the Companies Act 2013, no dividend will be issued on bonus shares and right shares. If you have studied Companies Act, well and good. If you have not studied, please write it somewhere in the introduction where I have given no dividend will be issued on bonus shares as well as on the right shares. Dividend, just a second. Okay. Dividend for year ending 31/3/2009 was declared by ABC Limited at 20%, which was received by XY Limited on 31st October 2009. So I have taught you all the dividend income, which is bifurcated into revenue income and capital income. I hope that was quite clear. If you have not understood that, please go back to that previous video, listen it again, read the statements, because the introduction, the theory of dividend income which I have given is very simple. Please read it from there. I am not explaining it again and again because you have an opportunity to go back and listen it again. XY Limited took up half the right shares. That means the right which was given to this XY Limited, out of that total right, they are purchasing only the half of the amount of equity shares, number of equity shares at the price which is given in the question, that is at the premium of 20%, premium of face value. That is, face value is 10 and premium is 20%. That means the purchasing cost of the right equity shares are 12 rupees. Sold the remaining right for rupees 8 per shares. That means the half rights, are sold at rupees 8 per share. Such rights sold is not related to the investment sold. That means the equity shares are not sold, only the rights are sold, which is an extraordinary income and it will directly go into P&L account credit side. Hope that is quite clear. Sold half of its share holding on 1st June 2010 at rupees 16.5 shares, brokerage being rupees 1%. So please remember, brokerage is there. So please mark over here, very important, read carefully so that you don't miss the brokerage part. And lastly, you are required to prepare investment account of XY Limited for the year ended 31st March 2010, assuming the shares are being valued at average cost. Simply ignore that average cost. We always value the closing stock at average cost. That means the balancing figure of the cost. I hope this is quite clear. The question is very simple. We are solving only one sum of fluctuating income bearing securities, because fluctuating income bearing securities is quite simple. Only the dividend part is very difficult. The students find it difficult, but I hope I have made it simple for you all. So firstly, I want you all to draw this ledger of equity shares of ABC Limited account. Please pause the video and draw it first. I hope you all have drawn. So let's start with the opening balance on 1409 to opening balance. Face value, in face value we'll write 15,000. 15, since we have 15,000 equity shares as our opening balance, so we'll write 15,000 in bracket. Okay, we'll write 1,50,000 as face value, since face value is what, 15,000 into 10. So in bracket you have to write like this, because there are various calculation where you will need the number of equity shares. So 15,000 into 10, which is equal to 1,50,000. Income is dash. Cost is given that it has the book value of rupees 15 per shares. That means 15,000 into 15, which is equal to 2,25,000. Simply put the value 2,25,000. There is no need of writing any working note for the opening balance. We'll move on 1609. We have acquired 5,000 equity shares of ABC Limited for rupees 1 lakh. 1 lakh is the cost. We have to find out the face value. To purchase, we have purchased the equity shares of ABC Limited. So the entry is equity shares of ABC Limited account debit to cash bank, to cash/bank account. Again here 50,000, we have purchased 5,000 into 10, which is equal to 50,000. Please write it like this, so it will be quite simpler for you all. And cost is given in the question, which is 1 lakh. Okay, so we have completed this. Now we'll move ahead of bonus. We'll move ahead to bonus and right shares. ABC Limited announced a bonus and right shares. Bonus was declared at the rate of 1 equity share for every 5 share held on 1st July 2009. So the bonus have been issued on 1st July, that is 1709. To bonus issue, the entry's name is bonus issue. You will get a clear idea of bonus issue entries when I'll be teaching you all bonus shares. There is an entire chapter I'll be teaching that, so there you will get a better idea. So don't worry about that. Simply I want to tell you all that bonus is something that you have received free of cost. Only in the face value column write the face value amount and the number of the shares. That's it. In the cost column you have to write 0, because you have received it free of cost. So firstly we'll do the working note for bonus issues, that is working note 1. Write working note 1, calculation of bonus shares or issue, whatever. Number of shares held up to the date of 1709 is the opening stock, that is 15,000, and we have purchased 5,000, which is equal to 20,000 equity shares we are holding up to the date of 1709. So on this numbers we will be getting bonus. The bonus share ratio is 5:1. For every 5 shares we are going to receive 1 bonus shares. That means the bonus shares will be bonus shares will be 20,000 divided by 5, which is equal to 4,000. 4,000 bonus shares will be issued by ABC Limited to XY Limited. So simply put 4,000, that means 4,000 into 10, which is equal to 40,000 face value, and in the cost column 0, and in the income column also 0, that is dash. So we have received bonus. Now let's move on to the next adjustment. Right shares are to be issued to the existing shareholder. Right shares are always issued to the existing shareholders. The existing shareholders can sell their right to the third party. That is something different. Okay, the company will issue 1 right share for every 6 shares at 20% premium. No dividend was payable to this shares. I already told you on bonus and right shares no dividend are being issued. So it is quite simple. So now let's calculate the right shares. While calculating the right shares, there is an important thing I'm going to show you all. Calculation of right shares. So while calculating the right shares, we have to write this again: number of shares held up to the date of 1st September, that is 1909. We'll calculate 15,000 opening plus 5,000 we have purchases plus 4,000 we have got bonus, which is equal to 24,000. On 24,000, the ratio is of right shares. Just a second. The ratio of right share ratio is 6:1. For every 6 share, one equity right shares will be issued. So let's calculate number of right shares, which is equal to 24,000 divided by 6, which is again equal to 4,000. So number of right shares issued are 4,000. So just don't worry. Firstly, I want you all to pause the video and copy this much. I hope you all have copied this much. Please pause the video and copy this calculation first. Please pause the video and copy the remaining part.